Hey, how's it going everyone? Welcome back to the Propips YouTube channel. Today we're going to be talking about one of the most important things for your foundation as a day trader. We're going to be talking about support and resistance the right way. Hope you guys enjoy the video. Okay, now let's talk about support and resistance. So support and resistance are basically predetermined levels in the market that help you identify where price could either reverse or maybe stop or start to consolidate. I like to look at support and resistance as ceilings and floor. So just for example, let's imagine that there's this person over here. Right above him is a ceiling, right? And right below him is his floor. Now, if this person jumps, he's basically stuck between a ceiling and a floor, right? So he's gonna stop and, he can jump either way. He's not gonna get out of that. In the market, something very similar happens. So this is, let's for example purposes, let's say that this is price. When you see charts like this, you will see that they have in certain areas where price will touch once, twice, thrice, and eventually it will break out, but it will respect that level. Once you can properly identify your key levels of structure, and of course with the help of your support and resistance, it'll cover the majority of your technical analysis aspect. The basic rule you want to keep in mind is there are basically levels in the market where if price gets to, it will react to the opposite direction or it will start to consolidate. So let's head on to the chart and let's take a look at some live examples just so that you guys can understand this much better. So we're taking a look at gold over here. We know that gold is one of those pairs that really respects the market structure. Right over here, I can draw my horizontal line and you can take a look that gold has touched this a lot of times and it's had a nice reaction from there. Okay, just imagine that this is price. Okay, price is currently ranging and this area will be the resistance, whereas this area will be identified as support. One tip to keep in mind is that the higher the time frame, the stronger the level. For example, let's say a support at H4. Now my H4 time frame will give me a much stronger level in comparison to my M15 time frame. That is just a rule you have to keep in mind. So let's take a look at H4. Just by looking at this, you can take a look that price has really tested this area a lot of times. So we're quickly going to mark this zone over here. This will identify as our resistance and below it will identify as our support. But this is the H4. So, it's a very dependable level. Let's fast forward. You can see that it's coming back up over here. Price is still coming back up. It's still within that level, trying to break it. It's having that reaction. And you can see that once price comes around this level, it has had a beautiful reaction over here, right? So that is support and resistance for you all. Now, of course, this doesn't necessarily mean that you're in a live market and you see a level of structure, a support or resistance, and you just start to buy or sell over there. There's something called confluence, which we will talk about going forward, and how to trade confluence-based setups. You need to have multiple things going for you. Now, if you've successfully identified a support or a resistance level or a channel, then you can add it as your first confirmation. And let's say you find a certain pattern after that, or you have some sort of fundamental analysis supporting you after that, you can add it as a second confirmation and so forth. So you need to have multiple things going for you before you can decide to take a trade. But if you guys do have any questions, please let me know in the comments and we will reach out to you for sure. Nonetheless, over here we can see that price reacted a couple of times. It tested the zone a couple of times before it had that bull run. You can see that there was resistance levels right over here. Let's just quickly go back. So right now we cannot really identify this as a resistance or identify this as a support. But as we go forward, let's count the hits. So you have one hit over here, right? You need to have 3 hits to confirm a support or resistance area or level. You have one hit over here for your resistance. You have the second hit over here for your resistance. You have the first hit over here for your support. We can also see a nice reaction, a nice wick reaction over here. Price has reacted once again. So now I've got like 2 hits over here and I've got 2 hits on the top and 2 hits on the bottom. So, we can identify this. Matter of fact, we have 3 hits on the bottom and 2 hits on the top. So you can identify this as a support or resistance area. And the next time price comes over here, it's got a beautiful pin bar, looks good for buys, and it should have a reaction. There we go. It's got a nice reaction to the upside. So a trade, just for example purposes, a trade would look something like this, where you're having an 85 pip take profit, 40 pips stop loss, a 1 or 2 risk to reward. Not too bad. All right, let's take a quick look at US30 as well. As you can see, I've already marked this out on my M30 time frame. You can take a look that I have marked a beautiful 1, 2 hits. You know, once again, once it broke out, but once it came back, it had another reaction over here. And the final rule, the final tip that you have to remember, a lot of times this happens where previous support areas turn out to become new resistance areas, and previous resistant areas or levels turn out to become new support levels. So this happens a lot of times in the market. As you can see, a clear example. So yeah, over here, tested, you know, once again, another reaction, broke through, came up, tested for a while over here, came back up, finally broke this properly, and then had another retest. So now it's retesting this, and now eventually it should fall down. Play around with it, because the best way to learn is by practicing and doing it by yourself. Of course, you don't want to overdo it, so try to keep your charts as clean as possible. Try to not like, you know, overdo things, and try to not have a very cluttered chart, because that's definitely not going to help you. And if anything, it's going to create confusion, because there's going to be way too many levels. So try to start off on the higher time frames, such as H4 or the daily, and then try to scale down only for confirmations, and then use just the key levels, the best levels where you think price can react off of, and, you know, keep backtesting it over time. You will get the hang of it. Thank you for watching that video, guys. Hope you guys enjoyed it. Make sure you like, share, and subscribe. And of course, if you guys want to check out our Instagram, the link's going to be in the description. So you can check out my Instagram at summer.hussein10. You can also check out the Propips Instagram, where I post more content over there. Apart from that, guys, thank you once again. As always, every like, share, and comment means a lot to me, and all your support means a lot to me. It's a new channel, guys, so do your part. And as always, I promise to do mine. I'll see you on to the next one, guys. Cheers.